What's going on, guys? Welcome back to the channel. In this video here, we're doing a stock analysis on Unity. We're going to load this up in the stock research tool. Sitting at $33 a share, we hit a high of 210, and now this company has been falling down by a considerable amount. And this is one of those companies that have been based upon hype. If this is the first time you're watching my channel, look at the company metrics category here, folks. Look at all of these lovely negative numbers that we're seeing across the board here. How can one justify all of this? Like no profits, no net income, no free cash flow, no return on invested capital, but we hit a price of $210. Here's the point I'm trying to make, folks, and what I'm trying to educate on my channel is we want to find companies that match or actually do way better than what the metrics indicate. It hasn't really produced anything, but people have pumped this up to $210 until it eventually started to come crashing down. However, for us value investors, when I see a price decrease, this gets me excited. Why does it get me excited? Because the stock becomes less risky. What's more risky, buying something at $210 and having it crash down to 30, or buying something at 30 and having it crash down to 10? You know what I mean? We're going to go through our financial valuations category, which we're ranking this 2 out of 10. Now, that's a terrible score. Now, what does my financial valuations category look at? Well, it takes a look at the cash flow statements, the income statements, as well as the balance sheets. That's how we're going to grade this thing. So with Unity, we actually don't have enough data to get our 5-year PE average because it hasn't been public for that long. So it's going to get 0 points there, but it should just be an A. Our current ratio is looking pretty healthy. That's one thing that they have going for them. They have enough assets on hand to cover their liabilities, and our revenue growth has been going up by a considerable amount over the last 5 years. Let's just take a look at that. We'll look at that income statement just to try to get the full story. We'll go to an annual basis and we can see what is going on. So okay, so here's our revenue, and it's looking pretty healthy. But cash flow statement, I gotta say here, this is where things kind of get ugly. It's up and down and negative across the board. This is a quarterly basis. Let's go on an annual basis, folks. Yeah, just absolutely negative across the board. And people are wondering why. I'm wondering how this was able to get up to $210 a share. And I don't want to really just bash on people that I'm potentially holding the bag, but more so just be an educator, because I was in a predicament like yours when I first started out. People would rather buy stocks on the way up than rather on the way down. We have a terrible return on equity average. We have a terrible debt to equity. We want to see this number underneath 50%. We don't have that at all. No free cash flow growth, no return on invested capital, no net income growth, and share dilution is insane at 74% increase over the last 5 years. Folks, they have been issuing out so many shares that you own so much less of the company. We want to see this number decreasing, folks. And what have they been doing? They've been issuing out more shares, and all power to them. And I'll tell you why it makes sense from the company's perspective, because look, people loved this stock once upon a time, and why not issue out more shares? People are going to buy it, so look, fund your company through that way. And it's clearly evident. And now here we are, $33.06. We're going to price this out in the price analysis section here. And we're going to look at a 10-year analysis for Unity, and we'll try to figure out what a fair value would be for this company. Here's what I did. But before we get into that, folks, if you're enjoying the video so far, hit that like button, hit the subscribe button. I'm just trying to be as rational as possible when it comes to investing into stocks, because I feel like there's so many pump and dump channels that exist on YouTube, and my process is not that. We like to look at just the straight numbers, because everything that the company provides is there for you to find out what it's actually worth. So with Unity, this is what I'm doing. I'm trying to stay as conservative as possible with our revenue growth numbers, doing 20, 25, and 30 based off what I've been provided here from the company. Now, here is the major problem, folks. After our revenue growth numbers, folks, this is where it gets a little bit shaky. I have to speculate, and I don't want to do that. But here's the thing. They haven't proven anything in terms of profit margin, free cash flow margin. The PE ratio is extremely low, is in the negatives, and the price of free cash flow is extremely high. I'm speculating a lot here, and I don't want to do that. But I'm going to do it anyways to see how ridiculous this is. I'm going to click the calculate button, And if you want to get your hands on this software, folks, stay tuned. It's becoming an app. Here is what we have. Click calculate. Our average price is $32.88. I guess the price just changed. Average calculation is $61.37. And you might think, wow, it's a buy, right? Average calculation comes out to $122.27. Moderates on $48. But off of what assumptions? Look at the assumptions I'm making in here, folks. 10% profit margin, 15% profit margin on our moderate and aggressive categories. These numbers don't exist. They haven't proven that at all. Even so, at $122 a share, did not make sense to buy it when it was at $210 at all. And now that it's in this $32 range, yeah, if you believe it's going to hit these numbers over the next 10 years, sure, have at it. But they haven't. They haven't hit those numbers at all. And this is where the rational thinking comes in. So what should you be paying for this company? Frankly, I don't think you should be paying anything for this company just yet. I don't think you should be buying this company at all. Yes, it has the potential to be a phenomenal piece of software, and yes, have a phenomenal business in the future, but let them prove themselves as a business in the future. Companies too new, they need to show some growth, they need to show some stability for this investment to make sense. I can't look at this company and say, yeah, you know what, I'm gonna gamble on it, because that's what it is gambling based off the negative numbers that were being shown. So what are my thoughts on Unity? It needs to prove itself. It needs to take this 2 out of 10 and at least get it to a 7. I need to see a lot more green on the board before I can figure out if it's worth waiting for or putting on a watch list. But that's the thing, folks. $61 average calculation based off of these magical unicorn numbers. If you agree with them, then have at it. And if you don't, let me know in the comment section below. So write me your thoughts. Write me a comment, stock you want to see analyzed in the comment section below. This software here will be coming out for you in the next little while. It shouldn't take too long to get it out. But we also have charts. We also have a lot of other tools that are coming along with it. So folks, those are my thoughts on Unity. It's overpriced. It hasn't proven itself at all just yet. If you believe my assumptions on the moderate and aggressive numbers, I don't know. You're living in a land of speculation and you're not really investing, frankly. So they haven't proven anything just yet. So I'm going to wait till they do before I can even think about putting this onto a watch list. But if you want to see a company analyzed, write it down in the comment section below. Likewise, let me know what you think about my analysis here on Unity and what are your thoughts. Let's get a discussion going. Tell me, if you think I'm wrong, write it down below. Anyways, folks, until next time, I'll see you in the next one.